Oh, it looks like this thing is on, so let's do it. Welcome again to another, I guess, video episode for Discovery Hills, Meadows area, including the whole Discovery, the neighborhoods around Discovery Lake. My name is Orzhel. I'm a broker owner of Realty Max. Welcome back if you've been following me for a long time. I really appreciate you coming back here, and I always forget to mention for you guys, if you haven't subscribed yet, feel free to subscribe. Sometimes I'll have more videos coming out, and the videos will come out randomly as I'm going to take on different subjects that I get questions on all the time. So if you want to be notified when videos come, feel free to let me know. Also, in the comments, if you have a moment, let me know if there's a particular subject that you want me to cover, and I'll gladly do it. Okay, again, Orzhel, Realty Max. We're operating here in San Marcos, and this specifically for San Marcos neighborhood of Discovery Hills. So first of all, I guess my newsletter is out, and Halloween's already upon us. I can't believe it, but believe it or not, it doesn't matter what I believe, right? It is here. So we're going to talk about mortgage rates. We're going to hit on market. There's been some changes, some shifts, and I think my view of rates have changed as well. And I'll talk to you a little bit more about it. And also I'm going to cover, you're going to see on the back page, I'm going to be running home selling webinars. It gives you an opportunity to, out of the comfort of your, in the comfort of your home, to kind of see how we do things, the things you need to consider, and how we use consumer psychology, social psychology, to really bring you the best possible experience in selling your house. Okay, so with that said, let me bring myself back here. All right, so anyway, so let's talk about the overall market, right? The overall market is still good. It's still a seller's market, although inventory has been building. The reason primarily for the inventory building is not because we really have more sellers that are listing. What I'm seeing is we have more homes that are not selling as quickly as they used to. So if you follow me and you've listened to my previous or last month video, I've already mentioned to you that I've seen some areas, outskirts of North County, maybe somewhere in Escondido, that there's been a softening in the market, right? Buyers are not jumping. It's just not happening. Initially, I attributed that to changes in policies that have been implemented by the NAR, National Institute of National Association of Realtors. We can cover that a little bit too on the webinar if you want to join us. But primarily, there's been kind of a stall almost. But I'm seeing the stall continue, and I'm seeing the inventory kind of grow a little bit because things are not selling as quickly. I'm seeing a lot of price reductions where I've not seen them before. Now we're doing fairly well still with our listings because we have a different setup, and we know quickly, even before we show the property, if we're going to have success or not. Sometimes we'll close it down and rethink and reevaluate and try to re-strategize our approach, because ultimately, if we can get people in at the same time, that's what we do. And if we can get a group of people that are qualified, because ultimately what we're trying to do is we're trying to get everybody in at the same time to bid up to price, right? Everybody wants what they can't have, and when buyers see other buyers being excited, it usually grows, right? It's contagious. And when there is nobody there, it's the opposite effect, right? So we want to keep things up and up. Okay, so what I want to talk about, let's talk about mortgage rates, right? As you already heard, you've probably been following, I think it was about a month ago or so, as you can see right here, the Federal Reserve has dropped the borrowing rates discount rate for the banks. And initially there was a drop in mortgage rates. Mortgage rates dropped right around 6%. We were able to get things even in a 5.99 something territory for a 30-year fix. But what you've been seeing here is it's been climbing up ever since. So we're back to 6.44, something like that. Let's say 6.5. So same thing right before it. So it does not matter what the Fed is doing. It seems like the market, because again, what it's looking at is trying to look forward. So what it's looking for is employment, and where before they thought the unemployment was going up, now it's actually going down. So they're thinking that probably the Federal Reserve is not going to drop rates, but I think it will, and I think the market's misreading that, and I'll tell you why. Okay, let me really quick just throw something else up for you real quick. Okay, so what you're seeing here is a graph directly from the Federal Reserve, and what you're seeing here is this is 2010, the initial, when we had this huge collapse in our banking system, right? The short sales, all that good stuff. But since that point, if you can look from 70s, right, it's fairly flat. I mean, we had some up fluctuation, but as you can see now, all this right now, it's more or less a hockey stick, exponential growth in our debt, right? The issue with that, like I said, although Federal Reserve is printing money, and they can, the problem with that is the debt service, or what the government pays for interest, has gone up, right? So the higher the rate, the more the government pays. And I believe the issue with that, it cannot be sustained. In order for the government to be able to continue this, they're either going to have to hike taxes a lot, or they're going to have to start inflating further. That means that will drop the rate down, and when rates drop down, that means they're going to put even more money into the mix, and I think inflation is going to continue. But I don't see what other choice they have at this point. That, you know, their point is they're going to kick the can down the road, because ultimately, this is about, it's about them, right? They have to keep things afloat, and like I said, it's an unfortunate situation. You know, I was talking to a friend of mine that's fairly well off, and I mentioned to him, are we in the throes of the Roman Empire era? If you ever read history, if you haven't, you should. What happened to the Roman Empire is exactly this. Like I said, there was inflation, there was mismanagement of money, there's all kinds of issues. So I think, even though last time I said I don't see the rates going down below 5, in the near future, this near future may be short-lived, because I think they will have to do this, because otherwise the amount of money they pay for the debt, and the debt is continuing to grow. It's just non-stoppable at this point. They're going to have to reduce how much money is paid, and the only way they can reduce that is by reducing what the borrowing rate is for the banks, right? So we'll see when that happens. I think that's enough about economy. That's as far as I'm going to go. It's maybe above my pay rate. I don't think it is, but so we'll see what happens. I mean, nobody wants to see inflation. I think if you have real estate, if you have other assets, I think you're going to be okay, because those things will go up. But I think the middle class is going to get worn out further and further, unfortunately. So what I want to talk about next, let's just jump into Discovery Hills and see what I can pop up. So here we go. Let me share the screen with you. So this is Discovery Hills. Let me see if I can make this a little bigger. Okay, so this is what's basically on the market, and also what is pending and what is closed. I'm quickly going to go through it. I don't want to take too much time, because my videos have a tendency of running a little long, and that's really not my intention, but you know, it is what it is. Okay, so Sparrow Court, this is Bird Street, the older neighborhood in Discovery Hills. 4-bedroom, 2-bath, 1794 square feet. It's on the market at $999. 91 days in the market. They haven't dropped the price. I don't know what to tell you on that. If nobody's buying, at some point you have to. Because what happens ultimately, if you do this too long, right? Let me bring something else up really quick. You know, you've seen this before, guys, right? This is buyer showings activity. Week 1 is when it happens, right? That's why we hold the listing back slightly and then let everybody come in. You know, this is where the interest at its highest. That's when people want to see the property, week 1. The longer you keep the home on the market, you're going to be dropping in activity down. But another thing you're going to be dropping in is perceived value. I'll show this graph to you again. I've showed it many times before. You know, just imagine, I'm not sure if you ever had this kind of situation where you lost the ball, or a ball ran away and it was rolling down the hill and you were trying to chase it. You know how hard it is to do, right? And that's what happens. A lot of times, a lot of people start chasing the markets. Let me just show you this one right here. So again, this is a different view of the graph, but again, this is ideal time to sell within the first 7 days. That's why we have the weekend sale. We try to focus all our attention on this weekend. We only show the home for an hour and a half, Saturday and Sunday. And a lot of people say, well, you want to give people opportunity to see it. We do. We provide enough time. And the way I look at these things, we're looking for the most motivated people, because the most motivated buyers are going to pay the highest price. And if people really like the house, and we have different settings we do to make sure this house, everybody wants to jump on it, including pricing. This is when the offer is going to come in. That's when the highest offer is going to come in. That's when the strongest buyers are found, right? I mentioned before, everybody wants what they can't have. And when they see other people that are qualified, excited, usually this kind of thing is contagious. Other people get excited, and, it's part of social psychology, right? And when things are down, people have a tendency of going in the same direction. So we really try to use market forces and social psychology to really give you the best possible opportunity to get the highest price for your home. Nobody else does that, as far as I know. Everybody kind of throws things up. And I think when the market's hot, things sell ultimately. But again, do they sell at the highest potential? I would argue not. So let me go back to what I was saying regarding market time. So this thing's been on the market for 91 days, right? Wild Lilac has been on the market for 26 days, 998 holding steady. But I want you to see something here, right? So let's see, there's one that's been on the market. So let's say Via Cruz, right? If you live in an area, maybe you pass by the house. I think Open Door was the one selling this. As you can see, this thing's been on the market for 120 days, right? That's 4 months. What have they achieved? Originally, they came in at 1,393,000, so let's say 1.4, right? At some point, they dropped it to 1,249,000, and ultimately they sold it at 1.2. Now the question is, could have they gotten more than 1.2 in the beginning if they did things correctly? I would say yes. They probably could have got maybe another 60 to 100,000 more if they did things correctly. So what you need to understand here, and I've said this many times before, and you saw it in the curve, right? Perception is reality. And market time and how days in the market is really devalue your property. More days in the market, lower the value. Okay, that's just the way things are. We're human beings. Our crocked brains are always working. We always look at things that other people want because we don't want to make a mistake, right? We don't want to make an error. So we're going to jump on things that we see other people think is a good deal, right? And perception is important. So I want to bring this up as well, right? Another one, Echo, 23 days in the market, 3-bedroom, 3-bath, 2741, 1,250,000, 1,150,000. And as I say in my newsletter, and I say it again and again, people end up losing tens, if not hundreds of thousands of dollars on sales all day long. A lot of you don't see this, and maybe the sellers don't see that, because selling your house is experiential, right? You have the experience and you just walk away at that point. You really don't know how much you lost, but you can if you look at other homes that sold, right? So it's really important to understand that. SEMA Drive, 7 days in the market, 4-bedroom, 3-bath, $27.99. Asking price was $1,539. They got $1,547 for it. Let's see what else. We already talked about Via Cruz. We talked about Pippin, I believe. No, not yet. Pippin was in the market for 9 days, 4.3. Let's see, it was $1,349,000 is the asking price, and they closed at $1,325,000. A slight haircut. Now this again. So there's a couple of factors: days in the market and how you also structure the sale, right? You want to make sure that all the offers come in at the same time. You want to make sure that people understand they're going to lose out, or create the perception they're going to lose out. So what happens is, like I said, a lot of times it just depends on who you hire. A lot of times it looks like a fairly decent property. Some age components to it, but overall it's a nice property, right? So usually what happens at this point is the offer comes in, and maybe people have seen the property, but no other offer comes in because maybe somebody wants to write an offer later. So you happen to work with this offer and you have nothing else on the table. Now you have to deal with one-on-one with the buyer, right? the best position to be in, and what I strive to, and 99% of the time do, create for sellers are multiple offers. Multiple offer is really, it's sugar time, right? Multiple offers create a situation where buyers are haggling between each other versus haggling with the seller, and then I come in and I hedge this further up, right, for the sellers. When you have one offer, what you can say no to it, but the buyer knows, what's going to happen. Nobody else, there's no other offers. So it gives buyers leverage, and you really want to have the leverage, and that's what we create that by our system. What else do I want to mention? I think that's pretty much it. I think we talked about everything we need to talk about. If you have the newsletter, let me bring you back up really quick. Okay, if you have the newsletter, like I said, read through it. I hope you like it. I get some calls sometimes. Hey, get this piece of crap out, off my from my door and things like. Look, bottom line, if you don't like it, don't text me, don't call me, and especially, I know a lot of you are not going to believe that people threaten me, literally threaten me, to do this and that, stupid. And the worst thing of all is the same people, right? They don't own the house. A lot of times they rent the house. So those situations happen. Well, I think somebody actually put a bad review on Google for what? Because they didn't like my flyer. It's like I said, some people love it, some people wait for it, some people don't, and it's okay, because I'm not here for everybody. But again, if you are thinking of selling your house, I just want to bring this back up. If you are thinking of selling your house, let me see if I can make it bigger. This is going to be November 3rd, I believe it's a Sunday, from 9 to 9:45. QR code here, so you can just scan that and register yourself. We're going to talk about best-selling practices, what we do, how market timing, how that affects everything. We'll be talking about marketing considerations, transferring your tax basis. If you're 55 plus, this is a very important component to you, because you can actually take your tax basis when you buy another home. So if you buy a more expensive home, there's a way for you to take majority of your tax basis and transfer it, and it's a huge advantage when you're buying a more expensive home. And we're going to talk about closing costs, commissions. Like I said, we're going to cover whatever, and we'll have a Q&A session. If you have any questions, we'll be able to ask, and I'll be able to answer. So that's all I have to cover. Again, Discovery Hills, thank you so much for looking at this or watching this, and if you have any questions, post them below the video. Otherwise, I'll see you either on a webinar or I'll see you next month. All the best. Bye-bye.